Have you ever wondered what it looks like when a stock just decides to go completely vertical? Well, today we are going to dissect the anatomy of a stock that has been on an absolutely wild ride. We're talking about Open, a name that's seen some of the most extreme volatility you can find on the market. Let's get right into it.
Just look at this number for a second. Nearly 2,000%. And get this, in less than 3 months. That is the kind of gain that creates overnight millionaires, sparks these endless debates, and really just leaves everyone asking one simple question. How in the world did this happen? And, more importantly, what is the technical story telling us now? In this explainer, we're going to pull out the tools of technical analysis. We're going to break down the charts, the indicators, the patterns, all of it, to really understand the anatomy of this massive surge and what could be coming next.
Okay, so to understand where we are, we first have to look at how we even got here. And that whole story is pretty much written in 2 key things, the price trend and the trading volume. So let's start with the price action itself. What's just staggering here is the sheer speed of this move. Back in late June, this stock was trading for just over 50 cents. By the middle of September, it had absolutely skyrocketed to a peak of $10.52. That's what analysts call a parabolic advance. Seriously, think of a rocket launch, just straight up. But what goes up that fast often comes down just as hard, and we saw exactly that. A really sharp correction or a pullback down to around 881 as traders started to cash in and take profits.
Now this chart tells the story all by itself. At the absolute peak of the frenzy, on September 11th, over 1 billion shares were traded. That is a massive sign of just intense speculative interest reaching a total fever pitch. Then, as the price pulled back, look what happened to the volume. It just fell off a cliff. This big decline suggests that, after that wild ride up, the market is finally starting to catch its breath and maybe digest that extreme move. So, we've seen the price and volume story. Now let's pop the hood and look at the engine. Technical indicators can seem really complex, but honestly, just think of them as the dashboard of a car. They're giving us vital info about speed, momentum, and engine health. Let's see what they're telling us about this stock.
First up is the RSI, or the Relative Strength Index. The absolute simplest way to think about it is like a speedometer for the stock's price. When it gets too high, we call it overbought, kind of like an engine running in the red. And when it gets too low, it's oversold. It really helps us gauge the momentum of a price move.
So, let's check that dashboard. The RSI is now sitting at 58.9, which is basically neutral territory. This tells us the stock has cooled off from those extreme overbought conditions it had at the peak. The MACD, another momentum indicator, is showing that momentum is weakening, so that short-term energy seems to be fading a bit. But the ADX, which measures how strong a trend is, and the Arun indicator, which helps spot trend changes, are both telling us that the underlying bigger picture trend is still very, very strong. It's still an uptrend, so it's this classic mixed picture. Short-term cooling, but long-term strength.
Now, moving averages, they help us smooth out all the day-to-day noise, so we can see the underlying trend a little clearer. And what we see here is the current price of 881 is trading above both the short-term 5-day average and, pretty significantly, the long-term 50-day average. When the price is floating above these key levels, it's generally a sign that there's still some residual upward momentum, even with that recent pullback.
And hey, if you're a fan of statistics, the linear regression analysis basically puts a number on what we've been seeing. An R-squared value of 0.84 is really high. It shows a strong correlation between time and the stock's price going up. In simple terms, it just confirms this has been a powerful, statistically significant uptrend. The analysis also shows the current price is trading very close to its expected level, which suggests it might have found a temporary balance after that crazy surge.
Okay, so that's the story of what has happened. But as a trader or an investor, the real question is always, what might happen next? Based on this whole technical setup, the analysis suggests the next day's open is likely going to be a period of consolidation as the market sort of figures out its next move. Let's look at the key levels and the potential paths forward. I want you to think of these levels as a battleground. Resistance levels are like price ceilings where sellers tend to show up. For open, those are at $9, $9.50, and that big psychological $10 mark. Support levels are the price floors where buyers have stepped in before. Those are at $8.30, $7.80, and $7. Right now, the stock is trading just below that first $9 ceiling, so we can probably expect a test of that level pretty soon. So what does this number mean? This is the 14-day average true range, or ATR. It's a measure of the stock's typical daily price swings. A value over 1 is quite high, and it tells us that this stock has the potential for some very large daily price swings.
We're talking over $1 in either direction. So whatever happens next, it probably won't be a quiet day at the office. This high ATR really reflects the stock's highly speculative nature. So, if we put it all together, the technical analysis points to 3 plausible paths. First, you've got the bullish scenario. The bulls take back control, they punch through resistance, and make a run back towards those $10 highs. Second, the neutral scenario. The stock just kind of consolidates, trading sideways in a range as the market catches its breath. And third, the bearish scenario. Profit-taking gets more serious, and we see a deeper pullback towards those lower support levels. Now, given the insane prior move, the most probable scenario is a period of consolidation, but as we've already seen, pretty much anything is possible with this stock.
All right, so after all that, what is the final verdict from this technical deep dive? After sifting through all the data, a very, very clear picture of risk and opportunity starts to emerge.
So what's the bottom line here? Well, Open presents an extremely high-risk profile. It has all the classic hallmarks of a parabolic move that has gotten way, way overextended. The indicators are flashing warning signs of potential exhaustion, and all of this creates a high risk of a sharp, sudden, and pretty painful reversal. While the momentum has been absolutely incredible, the long-term sustainability of a move like this is a huge question mark. The analysis is clear. Extreme caution isn't just advised, it's essential.
And I really want to leave you with this direct quote from the analysis because the language is just so stark. The stock shows characteristics of a speculative bubble with potential for violent reversals. This isn't just suggesting a gentle decline, it's a warning about the potential for catastrophic losses just as much as the potential for those significant gains.
And that really brings us to our final question, and this is a question for you. When you see a chart like this, a meteoric rise followed by a sharp correction, what truly defines the line between a bold investment and a dangerous gamble? That's something every single investor has to decide for themselves. Thanks for tuning in.